What is going on, everybody? In this video, we're providing you a state of the market and stock picks for September 2nd, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market. Now, I did provide an update yesterday on Twitter. If you didn't catch that, this is why I recommend you following me on Twitter at Hemi137. That way, you guys can get updates if I do not drop a video on YouTube. Typically, because yesterday there was not a lot going on. Today, I was calling out the descending wedge on my morning calls for a couple of days now, I think for like 2 or 3 days. That did sort of pop, but you're going to see here in a bit that technical wise, it'll look like we're setting up for a really bad push down. What we're looking at tomorrow is primarily non-farm payrolls. We want to see what is going on there and see if it's going to be good. We got surprised last time. It could be good in a sense, short term, that the market will run. In the long term, it's going to be bad because it's just going to be more of an incentive for essentially the Fed to come in and start raising another 75-point basis move. And what I've been alluding to, if you haven't been catching my morning calls, is that this market, the next domino that's going to fall is essentially the housing market. We're thinking there's going to be a mass number of bankruptcies potentially on the horizon, with people dwindling down savings, credit cards maxing out. These particular things are just waiting for the essentially that domino to fall, and that domino is going to take some time. But we are seeing mass layoffs. We're seeing a lot of companies not hiring anymore, and it's going to continue to be the case and get worse the more rate increases that we get. So now around the world, some things are getting bad, some are not. South Korea inflation slows a little bit, but one of the biggest things here to to really understand is Japanese yen is the lowest level it's been since September 1998. That's concerning, considering that normally when the yen does dip that low, we can potentially see some sheer panic, and this is why the dollar is actually creeping up. It's been floating around 109, and the dollar's just been exploding, which is good for us temporarily, but ultimately it's not good for the world, the global economy. So the global economy is hurting really bad, and we're seeing that. And so it's only a matter of time before things get even worse than they already are. The market has become numb, but it gets to points where reality sits in that it is really bad, to an extent that we may not know where it goes from here. And that's what's concerning, is if the market makers don't know whether the market's going for the next 6 months, then it becomes an issue. So tomorrow we get non-farms, and then we take it from there into next week. Do believe the ECB is next week for their rate increases, I believe, and then we have ours shortly after that. So with that being said, technical wise, this is something I've always said, looking at anytime you get a break, you're going to have a retest, and it's going to reject hard. This is going to be our first retest. Now, tomorrow, if non-farms are good, which for some reason I think they could be, just because people are working multiple jobs, I think this could actually pump straight up to, really, I would like it around the 4,100. I don't know if it's going to have that much juice if something's bad. Actually, if the report is lower, I think it might be more of a bullish signal, because of the fact that it means the Fed will potentially dial back, even though I don't see that happening. But you could provide that hopium. Maybe the Fed won't come in at 75-point basis move, so that could drive the market up to 4,100. But if it does come high, I could see us also potentially popping, maybe not quite as high, but then turning and dying off with the realization that the Fed's going to come right behind everything in just a couple of weeks and raise another 75 points. So we are watching that level. That's what I'm watching tomorrow, is roughly 40.65. Kind of really hoping we can get up a little higher, but we're going to have to see how this plays out in the morning. Again, it could flop, it could not. but really keep an eye on that level, because I think either way, good or bad, I think this could push temporarily before the rollover, because I don't expect the Fed to dial back from a 75-point basis move at all. I think if it's lower than expected, people might take that. Well, the Fed's not going to dial, not going to come on a 75-point basis move. You might get a little bit higher of a move. We might actually tag 4,100. Again, if we don't, and it's really high, again, we might get a little bit of a pop short term. Again, the 40-60, and then turn over and die. That's not guaranteed that's going to happen. This could be a high low forming here, so you want to be very careful of that if you're trying to short. So you do definitely want this thing to try to come up as far as it can at that 4,100 mark. But when you start seeing this turnover, you're starting to get that death cross, and that's what you're watching right here, is the 20 and 50 right here on the daily. If that comes anywhere near there, this market's going to turn over pretty heavy. So that's what I'm kind of watching. And then ultimately, this next whatever leg comes out of this is kind of really what I'm watching, because I think that's going to potentially put us down by that 75-point basis move, roughly around that 38.40, give or take, roughly around here somewhere. And then again, 100-point basis move is roughly around the 36.36, but I don't really see that happening. I think we're just going to continue to see these rollouts of 75-point basis moves at least to the end of the year, and then see where inflation sits at that point. And then I think we may start dialing back by next year. I think what could potentially happen. Again, we don't have many meetings left, so just keep that in mind. But that's the SPX, so that's what I'm really watching. Again, going over kind of very general sentiments, because tomorrow's really going to matter and things can change dramatically. Bitcoin, again, holding. If something bad happens tomorrow, if the market turns over, I think this is going to break, and you're going to see at least 15, potentially 14. Again, psychological numbers you really have to watch closely. So watching Bitcoin on the downside on that front tomorrow. Again, I think a temporary pop, maybe up to 21, and then roll over, and then attempt to try to break again that 18,500 roughly. So oil has come down, 87 a barrel. So keep an eye on that. Again, the dollar is still really, really high, 109. It's just absolutely absurd. And then we got Tesla. So Tesla, it broke some key levels. It looks just like the market. It looks like you're getting ready to get that cross here tomorrow. You might be lucky and get a wick up here to 284, but this is really kind of the turnover is what I'm looking for. And so we braked pretty easily with Tesla. Now it's like getting ready to turn over and flop. I think it's just kind of that sweet zone right in here. So really watching between the 250 and the 240 here. I think we really need some bad news to really start getting back down to this 220 level. It's always a possibility. You could break even lower than that, but I think it's still one of the strongest stocks, and I think you're going to get a potential wick around this zone right here. And this is what's going to be, I think the market could potentially, not to go back to all-time highs, but I think it could hold kind of going into Powell. So I kind of see it sitting in this range for maybe in the next couple of weeks, hit the bottom of the range, test the top, and just kind of go sideways until in the next Fed meeting. It's kind of what I'm doing, what I'm thinking anyway. So we'll see what happens there. We're looking at BA. BA actually broke today. This is interesting. It's been consolidating for so long, right? It's like a whole month it's been consolidating, just about, or half a month. It's been quite a few days. So finally get it broke. Looking for a retest here at the 158 tomorrow, and looking for that rollover and seeing how far value goes. So really watching that. Again, banks, JPM. Looking for the pop and the rollover tomorrow. Same thing here. You broke. You haven't really retested. You haven't had enough strength to really retest. So if we get a good report, I'm kind of hoping that gives us enough strength to try to retest and then roll over, and then watch for the break again here at 110. Breaks that, goes potentially almost back down into that range. And GS, same thing. Looking for this. It's attempting to try to climb now. But still looking for that candle to open below 329. If it does, could potentially start rolling over. 317 is support. 303 is support. You got Bank of America, so same thing here. You got the break. You're looking for the retest here at $35, and then you got support at 32, and then your next support roughly around that $30 mark. So that's pretty much what I'm watching. We're watching non-farms tomorrow. That will come out first thing in the morning. Then we should have Biden come out and speak about that as well tomorrow at some point. I don't really know how much weight he's going to have tomorrow. I don't think a lot of people are listening to him at this point. It's more so just what's the Fed's next move. We'll have Kathy Woods go over some general market sentiment over this weekend too, which I always think is a good insight to be listening into. I think she provides some great perspective on just the economy in general and how what the potential next moves are and what she's seeing in the data, which is good to see. So that is coming out, and then look forward to the weekly update later on this weekend. So with that being said, have a great day, and I'll see you guys next time.